Y tenemos ya que saludar a nuestro siguiente invitado, a Robert Milano, que es Senior Investment Strategist y Head de EMEA Equity Business Development en Alliance Bernstein. Robert, good afternoon.
Good afternoon. Thank you for having me.
Thank you for being here in Negocios Televisión in this interview, Robert. The MSCI world has generated impressive gains to start the year, and while the healthcare sector has delivered positive absolute returns, it's true that it has lagged the broader market. What do you think is causing the relative underperformance, and do you still believe that the healthcare sector is an attractive place to invest today?
So we do certainly believe that the healthcare sector continues to be an attractive place for investors to focus on in today's market. I think it's definitely been a challenging start to the year with regards to the many cross currents that we've been dealing with. Right, we've had the expectations for Fed rate cuts, which at the time, at the beginning of the year, the market was expecting about 6 rate cuts from the Fed. Now that's down to 1 to 2. That's really been driven by more persistent inflation. It's been driven by the prospect that rates might have to be higher for longer. The challenge associated with that being potentially recession. At the same time, that consumer spending has been very strong, which has helped support inflation. We've had corporate margins which have been resilient. So there have been a number of competing forces that have created some dislocations across the market. But the one thing that has continued to perform very well has been AI, right? And AI has helped to fuel performance in areas like tech and communication services. And I think we were all hoping for a bit of a broadening of the market from here, or from where we were last year after very record concentration levels. But so far to start the year, there certainly that has not materialized to the degree that we probably would have hoped or anticipated. When we look at the underlying fundamental integrity of the healthcare space, things continue to be really solid. I mean, growth opportunities are really supportive. The political environment remains okay. There are still other great innovation opportunities within the healthcare space also. So we continue to feel really comfortable with where the healthcare sector is. And more recently, some of this kind of intense focus on AI and AI beneficiaries has created some attractive entry points, we believe, for longer-term investors in the healthcare space.
U.S. managed care sector in the stock market has significantly lagged the healthcare sector this year. Robert, can you provide your thoughts on the attractiveness of this industry?
Yeah, sure. So for those who aren't as familiar, within the U.S. healthcare system, so managed care groups are companies that deliver both integrated patient care and health insurance to members who are part of their network. So they'll have a network of doctors and service providers, general practitioners, et cetera. And that really helps to provide a more cohesive healthcare environment for the members of those respective managed care groups, since in the U.S. we don't have a publicly funded option as we do in other parts of the world. So there have been a few things I think that have been a bit challenging for managed care on a year-to-date basis. One, they're inherently viewed as more defensive parts of the healthcare space. So I think as we've seen more of a risk-on rotation following what was a difficult 2022, throughout 2023, they were a bit of a laggard given that defensiveness. That's been true on a year-to-date basis as well. But there also has been increases in utilization. So you think about post-COVID, people starting to go back to the doctor on a more regular basis. That inherently requires the insurance companies to pay out a bit more in the way of claims. So it's higher cost for the companies. And in the month of April as well, for those companies who have exposure to government-backed healthcare programs, specifically Medicare, which is generally for those with disabilities or for the senior population, there is a regular update to the reimbursement rates that the governments pay back to those private companies. And the reimbursement rates came in a bit lower than investors anticipated and the companies anticipated. So the concern was with higher costs associated with people going back to the doctor and lower reimbursement rates, it would impact profitability for those businesses. What people tend to overlook is that those rates get updated annually. So those will get renewed or kind of revisited in the next year. So it's a short-term issue. And also many of these companies can look back at their overall plan profile to restructure the plans to help try and maximize profitability. So we think that this is a manageable issue in the near term. but it has created a bit of volatility at a time when generally the market has been supported by a risk-on mentality, and some of the more defensive pockets of the market have underperformed in relative terms.
As we approach the U.S. election, what is your outlook for the healthcare sector?
Yeah, it's the question that comes up the most, especially as we approach the election now. Our view is that generally the election outcome should be fairly benign for the healthcare space. We have known Biden in office as he is now. We've known Trump in office as well in the U.S. market. So there shouldn't be much surprise as to what their policies will mean for the broader healthcare space. Neither of them are very supportive of significant disruptive legislative changes. So people aren't going to expect one of the candidates to propose doing away with managed care in favor of a publicly funded healthcare option. It's just not really where the country is today. And plus, in the Inflation Reduction Act, there were some drug pricing proposals incorporated into that, and we believe that those are fairly manageable over time. The other benefit is that generally in Congress, there isn't a really significant majority on either side of the aisle, Republican or Democrat. So with a very slim majority and gridlock, that generally means that there's not a lot of disruptive change coming down the pipeline. So that's generally good for markets, and also we think would be a fairly benign environment for the healthcare space. So nothing concerning to us as of right now. Of course, we have to monitor it, but in any case, if there is more volatility, which is probable as we approach the election, it creates opportunities for us as active managers to step in and buy really good businesses at much better prices.
What are some of the interesting trends that you're seeing within the healthcare sector today?
Yeah, so there's really four, I'd say, big trends that we've been following within the healthcare space that we think create some really interesting, innovative opportunities. So one of which is robotics and equipment. So the idea that you can use medical equipment in order to have minimally invasive procedures, whether that's robotic surgery tools or maybe novel ways of, say, replacing a faulty valve in your heart or hips or knees, ways that we can help to get people in and out of the hospital more quickly at a lower cost, help improve recovery time, and help deliver a better outcome for both the patient and the healthcare system. The other area that we think is quite interesting is diagnostics and life science tools. So this is specifically things like better testing, better imaging. We think about things like DNA sequencing, ways that we can help to identify diseases at an earlier stage, help to treat them more quickly, help to develop new drugs to potentially target those diseases that have been identified earlier. So some really interesting business models there. There's the obvious one in biotechnology and pharmaceuticals, so disease management, other ways that we can look to create new drugs that help to cure some or at least treat some of the world's ailments. And then the other area that's a hot button topic today that's not really properly reflected in the healthcare space, I think, is technology and AI. So there's a tremendous amount of data in the healthcare space that is just very difficult to manage. AI should help us be able to sift through that data and observe and make observations a bit more effectively and more quickly. There's better ways for us to help with patient care, digitizing medical records, connecting both pharmaceutical salespeople with doctors, for instance. So there's a lot of different opportunities that we think are driving significant innovation. And at the same time, there is very little elasticity of demand in that you have to access the healthcare system. You cannot put your treatment off in perpetuity. So there is an underlying stability and fundamental support for these businesses at the same time that there is a really significant runway for longer term growth. So to us, this creates really attractive longer term trends for investors to consider as a part of their broader global equity allocation.
Mm-hmm. Robert Milano, Senior Investment Strategist and Head of EMEA Equity Business Development at Alliance Bernstein. It's been a pleasure to have you here in Negocios Televisión. Thank you so much.
Thank you so much. Appreciate being here.